We just talked about this a few seconds ago. Donald Trump has run into a legal challenge.
Right.
They've now appealed. What do you think happens next? And do you think we will see more of these challenges come about? And do you think it gets in his way?
You know, I'm not a legal scholar, but it was clear that the so-called reciprocity tariffs, which was 10% across the board, doesn't have a national security justification, which is what he has used to actually put tariffs. So I think this one is probably in trouble. There's going to be legal steps, right? But I suspect that he will have to take this one off. He'll replace it by something. He will basically, I think, try to get tariffs against particular countries. We'll see how it goes. It's just one more level of uncertainty. If we thought there was a limit to uncertainty, I think we learned that the limit is being pushed, right? So I think uncertainty is really the dominant factor. It's going to constrain him to make different arguments, probably to get the approval of Congress, which he has not. And I think Congress will give it to him under some conditions.
Right.
Not many is my guess. And it will just go on and on and on.
Has it paralyzed, to some extent, economic activity?
Paralyzed is too strong, and you still consume. I still consume, but if you have a firm and you're thinking about the next step, which is, am I going to put my plant in Mexico or Arizona, or in Vietnam or in China? Am I going to move to the U.S. if I'm a foreign firm and I find myself against Mexican firms, there is no tariff anymore. So it seems to me that any firm which is directly involved is going to say, let's wait, just wait. It's not the end of the world if I wait 6 months and I see what happens, because otherwise I'm stuck for 10 years, 20 years.
Right.
And then it applies to all kinds of firms. And so I think there's going to be a big effect on investment. I think that's for sure. Then you get what we call the multiplier effect, which is if activity slows down and the consumers don't know where it's going, consumption. So yeah, I think no question that we're not going to get the growth we would have gotten otherwise. It's more complicated than that. I mean, we can talk about various countries. I mean, in the US you have the fiscal aspect. Now that looks like a fiscal expansion, as bad as it is for the long run.
Well, it looks like it's more spending.
It's more spending. So in general, we think of this as good in the short run because it increases demand if there is a need for it. Bad in the long run, which it is. This one is a bit of a strange beast, right? Because the money goes to the rich, basically, right? The tax cuts,
right.
And the rich don't spend much.
Well, what's your assessment of the U.S. economy? I mean, that sounds like a very simple question, and partly it is, and I just want to get your thoughts on if the U.S. economy if it is slowing, and we don't know, if it is slowing, why are interest rates going up?
Why interest rates going up? I think because of risk premium, because of the fiscal. So the fiscal has two effects, right? In the short run, it can push demand. I don't think it's going to do much of that because of the particular shape it has. But we're clearly on what's known as an unsustainable debt path, which is that if we do nothing, then there'll be more debt than we can ever afford, right? And I think the markets are starting to worry about this. So you're seeing the long end of the yield curve kind of go up, right? If I were an investor, I would worry about buying a 30-year maturity treasury because God knows what's going to happen. I would buy a 1 year because there's not much risk. I mean, even if I think that the policy is crazy, I'm going to get my money back in a year, right? But if I buy a 10-year, I start saying, things could happen. So in the utter fiscal irresponsibility of this administration is clearly what explains the higher rates.
Well, it seems
and you've seen the yield curve. It goes down and then up, which means people anticipate the slowdown, that the Fed will help a bit, but they're very worried about the long run.
Do you expect the global investor community to continue to de-risk and reduce their exposure to dollar assets for the various reasons that you've outlined?
I think that indeed, I mean, we've seen, we got a whiff of this a few weeks back when the bond market went the wrong way. But the issue at this point, and where do you go? This is a discussion I've had at this conference. What do you buy? You buy gold. So being from Europe at this point, I think that Europe has potentially something to offer. So we're working on a project on Euro bonds, which would basically try to create a market which would not be the size of a treasury market, because it's much too big.
Yeah.
But it's big enough that investors could go there, we would get a safe asset, deep market, liquid market. Right? If we can do this, then I think it will be attractive. But in general, I think the time where the only place to go was the treasury market is no longer there. I think he has broken something which is not going to be repairable.
That's an interesting point, because one of the views that came up a few weeks ago, the conversations around reserve currency status implicitly gives the holder of that status almost a license to fiscally misbehave and not pay for it. And now I wonder, everything that's going on, the alternatives now to the U.S. You see Europe and China talking. You see China talking to its other trading partners. Do you think all of these things, on aggregate, will put a lot of pressure on the White House and Donald Trump to step back and do a deal that might not be as beneficial to them as initially expected?
One can hope. The fact that you and I can borrow at low rates relatively doesn't make us irresponsible. Right, so by
we don't
itself,
have to borrow in US dollar,
it's not the cause, but it makes it easier indeed. And I think if he sees that investors are reluctant to actually, continue to lend, he's going to think. Now, what is he going to do? I think on tariffs, he's probably going to do a bit, maybe a bit less than he would otherwise. On fiscal, is Congress going to basically turn around and do the right thing? I think it would take a substantial increase in long rates before this happens. One can hope. But I think we need more. I mean, you need a change of mind. It's just not, the interest rate is not going to do it by itself.
Well, does the Fed need to do it? As a final quick question for you. Does the Fed need to be able to beat that backstop? Does it need to lower rates?
No, I don't think it should lower rates. I mean, if a recession comes, then clearly the Fed has a mandate to try to sustain activity. It should not lower rates in order to facilitate the financing of a deficit. That's very clear. Now, I suspect it's going to cut rates because I think we're going to see a slowdown. So I think what the markets are predicting, I think is about right. I mean, I think we'll see the decrease in rates.